Hey everybody, welcome to the morning market briefing. It's Thursday, June 25th, 2026. Hope you are doing well out there. Lots to get to today. We're going to jump right into it with Micron been up almost 20%. Insane numbers. How we feeling about this run? We felt like it was going to be a big move one way or the other.
Yeah, I think this is one where people are going to get their percentages wrong because you know how you have to subtract one when it's over 100% or anything when you do a percentage. So we're up 4.5 times, which is, of course, 350% year-over-year growth in Micron revenue. And the guidance for next quarter is for another 350% growth. 86% gross margin is what they're coming in at.
It's crazy.
Unbelievable for a commodity. 82% operating margin. This is not sustainable. There's going to be competition that comes in. There's going to be capacity that's added. We already talked about SK Hynix raising $30 billion. So that's going to accrue to people like ASML and some of the capital equipment providers. But overall, they're saying, look, you need a ton of memory for AI because there's a ton more stuff being produced, exponential amounts of things being produced, and they're basically booked out not just for this year now, not just for next year, but now into 28. And they're signing long-term supply agreements with companies, with customers. Not something new, but the scale of it is just remarkable. Their data center business, they did $1.5 billion in revenue that last year. They're doing $11.5 billion in this quarter this year. So you're up from 1.5 to 11.5 in a year, where your volume is up like 15%. The rest is price, and because the price is doubling every quarter.
And they continue to, interestingly, on their guide, obviously blowing through previous guidance, but noting that they expect constraints to continue further out into the future, and beyond calendar year 27 is what they noted.
Yeah, and it's really remarkable to me just to consider the amount that it's basically a bidding war right now. There's a bidding war in terms of companies getting memory chips. That's all there is because the volume is the volume. The capacity is the capacity. It's growing low single digits on a quarter-over-quarter basis, which doesn't compound to phenomenal growth. It's not like NVIDIA that's growing volume like crazy. It's all price, and that's got to come home to roost at some point.
I mean, this is basically the Strait of Hormuz with chips.
Mm-hmm.
I mean, it's not dissimilar, right? I mean, there's only so many they can get through, and everybody wants them. And so...
And Micron's dropping landmines all over the place.
Those who are strategically tied to that commodity, like oil, the chip game is becoming... I mean, how about we get a tweet? Let's get a price gouging tweet. The price of chips must come down.
We need more chips per bag, too. Different chip. But
yeah, shrinkflation.
Yeah. I mean, just an insane run. What are the knock-on effects for market implications, Ben?
Well, I think that there's going to be concerns that Meta and Google and Microsoft and others pay too much money for these. And
seeing as Micron's doing a victory lap about how much money people paid for these.
Exactly, and their CapEx is going to go up. I mean, already we saw in the last quarter that CapEx expectations were raised by about 20 to 25% for each of these companies solely because of memory. And I would expect that the same thing would happen this quarter unless they change their expectations on AI consumption. So I think there's some really significant impacts from that. I think there's some significant impacts, again, for the capital equipment providers for actually building new chips and building new capacity, which is going to happen because that's how the market works. And I'm curious to see how... I mean, right now it looks like the big hyperscale companies are just paying whatever Micron asks in order to get these memory chips. But I wonder if that starts to peter out at some point. Certainly there's no sign of that right now.
A pretty volatile day, even by Trumpian standards, I would argue. Yesterday, big expectation for him to come sign a housing bill that was seemingly truly bipartisan.
85 senators, I think.
And shortly before it, Trump said, nah, not doing it.
Yeah, that was kind of, I mean, even Levitt was saying this is going to be one of the most consequential pieces of housing legislation. And then Trump said no. And I think his reason for that was that he was concerned that it would result in lower home prices. And he basically said,
that hurts the wealth.
Yeah, he said, we don't want to hurt the wealth. What we just need is interest rates to go down. And he's just like, you know what, instead of doing this bill and creating all these other things to do, which I think on net probably would have helped the housing market at the margin, although a lot of these things are like pilot programs for grant money to go to local governments to convert commercial buildings into residential apartments. And there are some things that are politically popular that seem just kind of a waste of money, frankly. There have been a number of things that I've disagreed with Trump on. This is not one of them, not signing this housing bill. And I do think that the housing market is tough. But, I mean, look at the housing stocks yesterday. All the housing stocks up were like 10, 15% because interest rates were down, not because this bill didn't get signed. So that's why housing stocks are doing well, and that's why people think the housing market might improve, not because of this bill.
I mean, there's a lot of negative consequences that could come from this too, because the sneaky thing is that's where the states make their money. It's on property taxes. It's becoming increasingly less on income taxes. And if you force through, and I go back and forth on this. There's the idea that a corporation would be capped to the number of single family homes that they can buy, which I think on paper is actually a good thing. And I don't know how you would, if you'd make them force sell them, but if you did, you'd see cratering in housing prices in a lot of major markets, which would really hurt the states. And, you know, that's the problem you have is like, that would probably crush Florida. I'm sure there are plenty there, San Diego, a lot of these places where you've seen huge inflows, a lot of Texas. And that would be a problem because they don't have state income tax in Florida and Texas. They do in California, but they can't meet their budget. But because they can't continue to raise property taxes, they can't continue to raise state income taxes. Now they're rolling out the wealth taxes to try and ding people because, you know, they can't. If you only are if you're a billionaire and you own one home in California, they can only get you for so much. And that's a problem. That's why how do they do it? Then they roll out the wealth taxes. So there's a lot of different ways that this could be potentially harmful. I think you'd almost have to sunset that where it's like, if you're over 350, you can't buy more. But if they were just like wholesale, today's the day, you can't own more than 350 homes, like Invitation Homes would probably go to zero. I mean, that's it's a publicly traded company whose whole business is that, a spinoff from Blackstone.
When there's been government involvement in housing, housing affordability hasn't improved.
Yeah.
I mean, that if there's one lesson for that. And so I think that not passing this bill is actually.
I mean, I was listening to a podcast this week, and this is incredibly anecdotal, and I do not have the evidence right in front of me, but they were talking about one of the challenges in New York City on the affordable housing thing. It's just the massive amount of regulation required. And they cited like one builder who built quote unquote affordable housing, and the cost of building that property was over $1.5 million. And literally next door, he built something that was not zoned for affordable housing. And because there was so much less red tape, it was like $300,000 to build it.
I mean, that was the whole thing with the NGOs in LA where they're spending $750,000 per bed for homeless people. And it's like, well, the only reason they're doing that is because they're just siphoning money off everywhere, the regulations, the amount of where you can build and what the rules are. And I mean, it's just ridiculous.
So Trump, no go on the housing bill. He says he wants to see the SAVE Act revitalized. I just don't see that happening. I don't think there's political momentum behind that. And
I think he's sorry. Man.
Yeah, and he's wanting another $88 billion to come through in a supplemental spending package. Much of that going to the Department of Defense to kind of reset after the war, and then some money going to farmers, and surprisingly, at least to me, $1 billion to go to the modernization of Penn Station in New York.
Yeah, that was definitely a surprise to me as well. I think the farmers, they've been talking about a farm bill for a while. Frankly, again, this is an area where the farmers are going to be helped a lot more by lower fertilizer prices, lower fuel prices, and lower financing costs, all of which yesterday moved in the right direction because of an unwind of the war. So, but the lion's share is the defense, $67 billion for that. The Save America Act, I think, is interesting politically. I think it's kind of a win-win. Either it gets passed, unlikely, or ahead of the midterms, or it doesn't get passed ahead of the midterms, and then Trump has something to blame for why the midterms didn't go.
Yeah. Cal-Maine Foods settling a probe with the DOJ. They're paying several $1 million in civil penalties and donating more than 50 million eggs. This has to be the largest egg donation in history.
That's. I just wanted to talk about this for the egg donation. Beyond anything, obviously the DOJ is still looking into the poultry and the beef industries, and there is price fixing, there is collusion that goes on here. I know even in Georgia, there was a big poultry farmer who was price fixing and racketeering, as they say. But it looks like we're just getting free eggs now, so the Russell household will be happy with that.
It's a lot of eggs.
Yeah. I mean, every time you buy eggs, there's a very high chance you're buying a Cal-Maine Foods product. It's surprising to me that they're not a bigger company or a more visible company, because they've got Eggland's Best, Land O'Lakes, the 4-grain, which are like the ones where you get the omegas and stuff. But what they feed them. I mean, they own like half of the egg aisle is all them, and you'd never know it.
Yeah.
And it's one of those weird companies where I'm trying to think of a better example of a company where you buy their stuff and nobody knows what the parent company is actually called.
Yeah, it's a pretty good one because
it's a good
an
one.
everyday product.
Yeah, like Newell Brands is probably a good one, but like at least Newell Rubbermaid used to be a big brand. And they dropped the Rubbermaid though. I don't even know if they still own Rubbermaid.
Yeah.
But Sharpies are a Newell product.
Yeah.
People probably assume Sharpie is its own
It's
thing.
Sharpie, yeah. Been some data suggesting that perhaps the K-shaped economy that we've been talking about, others have alluded to quite often as well, may not be quite as pronounced as people are expecting, meaning that the gap between the higher earners and the lower earners in this economic scenario might actually not be as wide as feared.
Yeah, Hicks, can we get that chart shown up? Basically, so PNC Bank put this out last night, and basically what we're seeing is that spending among higher income consumers was running 4.5% ahead of spending among lower income consumers last year, and now it's like 1.5%. So you've actually seen lower income consumers start, and this is excluding gasoline, by the way. So lower income consumers have actually increased their spending relative to higher income consumers. On top of that, in the second chart, Hicks, we can see that the savings buffer has not changed for the lower income consumers. So some of this is coming from higher tax refunds, but a lot of this is just coming from higher income among lower income consumers.
No tax on tips.
No tax on tips.
Construction being repatriated and high white-collar jobs getting destroyed left and right by AI.
You nailed it. And so this K-shaped economy that we've been talking about may be more clickbait than reality at this point in time.
We've got an inflation read coming in. Looking at PCE, we're looking for, I think the expectation is for 0.5 month over month. Looks like we came in a little cool.
Yeah, it's pretty much on the screws in terms of the headline number, but the only number that came in, the month over month number is 0.4. A lot of the estimates were right at like 0.45. So Moody's, I think, is the only one that was under. So I'm assuming this is going to be somewhere in the 0.44, 0.43. Bloomberg doesn't run it out to 2 digits, but I would say that they're probably rounding down there.
Is it 0.45 in the end?
0.45. So yeah, so it's right in the middle. Everything else came in line. I think it's the GDP price deflator they put in there is at 3.6 over 3.5, which I don't know. We'll see. It's right above the actual number, which is 3.4 on the year-over-year core price PCE. But I think that a lot of people were thinking this is going to be higher, especially if you look at the estimates on the banks. A lot of them were closer to 0.5, and rates are moving down yet again today, which is nice. So we got down to a 4.38 on the 10-year. It's bumping around a little bit, but that was the immediate reaction is that we've got lower interest rates kind of across the board.
And now I think the conversation shifts to CPI. This is May data, This is the classic echoes of history that Kevin Warsh was talking about. By the way, Kevin Warsh is going to be in another public appearance next Wednesday. with a bunch of European central bankers. So that'll be interesting to watch. But this is the echo of history. Where we're going, though.
4.36 now. And a lot of people, the haters and losers, will like to address you personally. We're at a 4.82 on the 30-year.
It's going to 8.
Yeah.
Hicks.
In your face.
Can we pull up that Cleveland CPI? So this is a CPI nowcast that comes out of Cleveland Fed, and they have CPI deflating on a headline basis in June. And this is why we're going down on the 10-year. I think we have a 7-year auction maybe today, but this is why we're going down in interest rates, and that is, where is the puck going? The puck is going to lower inflation. And we're going to start seeing that here in the next couple of weeks.
As foretold by the boys. Good stuff. We'll wrap it up there. Hope you guys have a great Thursday. I don't know if we got that last chart up or not, but we'll be all right.
Be sure and get your burrito.
Yep. Y'all have a great Thursday. We'll talk to you tomorrow.